All right, welcome to today's very special webinar. We are going to be talking about precious metals right here in 2015. You know, precious metals are gold, silver, palladium, platinum, of course. These are investments that many people choose to hold in the middle of crises, in the middle of collapse. But not just that. They're not just catastrophic type of investments. They also serve the purpose of money historically. And so there's a lot that goes into precious metals. There's a lot of things to think about. There's a lot of things that impact them. There's a lot of economic decisions that go into purchasing precious metals. And so today we're going to be talking about, A, what those economic situations are, what we are currently faced with. And we're going to be talking about how metals have been responding. And we're also going to get into some of the basics of buying metals. So we'll also have a time for you to ask questions toward the end of the program. So if you have questions, please feel free to chime in with those in your question box. Very glad to be joined today by Precious Metals Advisor Tom Cloud. Tom, you should be able to hear me now. Tom, are you there?
I am. I can hear you very well.
Fantastic. Great to have you today. And Tom, we're going to go ahead and just dive right in. This presentation that you have put together is very comprehensive, so I think we should just, without further delay, just go ahead and jump right in. Do you have anything to begin with before we do?
No, I mean, just things we go to it. We talk about a lot of different issues that are affecting precious metals, and certainly we're looking for movement this year, even though things have been fairly quiet for all investments this year except silver. It's off to a 5.5% jump, but the stock market, the gold market, they're up a little over 1% each. But the big move so far has been in silver, and we'll get into why that is and some of the things in the presentation.
Fantastic. Well, why don't I hand things over to you, Tom, and you just go ahead and take it right away. It looks like we're staring here at a U.S. national debt projection.
Yeah, all I really want to say there, Jerry, is these are not my figures. These are put out by the government back in 2011, and you'll see where that broken chain is, and then the addition onto it ever since I've been using it. And what they've even told you is they're going out to $25 trillion in debt, and when the U.S. Congress and Senate allowed Obama to not have to raise the debt ceiling anymore in Congress and Senate because of the debacle in August of 2011 when gold went up $200 and $300 in about 2 months because of the debt ceiling debate and a lot of the information being brought to the public. And they just said that wasn't good for either party. So they basically gave Obama a free printing press for the remainder of his term. And for the ones that didn't catch it on March 15th, he raised the debt ceiling from $18 trillion to $19 trillion. And we're just headed straight toward the $25 trillion number by 2020. And it's just right on schedule. And people have to realize this can't go on forever.
That is so true. Let's take a look at our next slide here. Very interesting. The U.S. national debt ceiling increases.
Yeah, and that's it. The February 14th one went up to 17.2, and the March 2015 one is not on there, but it went up to $19 trillion. $19 trillion. You just sit there and look at it since 2011, and you're seeing just watching it go up $500 billion, and then $1.2 trillion, and then $2.3 trillion, another trillion, then another $1.75 trillion, and there's just no stopping it. Just a different way to show it.
Here we have a budget deficits that show that are not improving. That's something you don't hear too much about, Tom, is the continuing budget deficit here in the United States and the trade deficit as well.
No, it didn't, but while I'm thinking about it, Jerry, my screen just went down on that. I don't know what happened, but it jumped down. I don't know what I need to hit to get it back up.
Oh, probably it might be in your toolbar down at the bottom.
Let's see here. Probably is.
or you might hit Alt-Tab, and that should bring.
Okay, 1 second.
Yeah.
It didn't come back up, and this is crazy. Right there when I'm talking. Let's see. No, it's completely messed up. It's
okay.
terrible.
Well,
what happened there.
Well, no big deal. Well, you have your slides there, obviously, but the budget deficits, of course, we're showing a slide here of the budget deficits not improving, and the projected show that they're going to be getting worse and worse as we head out to 2025.
Do you think I need to get out of the seminar and go over to my slides?
You sure could if you wanted to. Absolutely.
Okay. Then that way you can let me know which one is up. I don't think that's the only way I'm going to be able to do it because I don't. Oh no, it's back. Okay, that's weird.
You see it?
Anyway,
okay.
all was saying now the federal budget deficits aren't improving. You can see only our own government, which is always way too conservative, is saying, look, by 2020, we're going to have another rapid. We've had this improvement. They're saying, which you really see a little bit from $1.3 trillion down to $700 billion, like that's major improvement. But now they're saying with the interest on the debt and the compounding effect, our government's even telling us that the budget deficits are going to get worse. So, and we know it's going to even be worse than what they're telling us.
You know, we've been living in this time, friends, you know, those of you in the audience, we've been living in this time that's been somewhat of a fairy tale as the markets have been rising. And I think that's really kind of the point of what you're going to be hearing today. It's beginning to build. People are beginning to notice that this recovery, quote unquote, that we heard that came back in 2010, 2011, as the Fed began to pump more and more money into the system, we really have begun to see some improvements. I mean, when you take a look at some of the things that have been happening around the economy, you are seeing some improvements. But you know, again, we need to stress here that what do you expect when you pump trillions and trillions and trillions of dollars into the economy? If you don't get some sort of improvement, then you know you might as well hang it up. So of course you can get a little bit of a boost by pumping in fresh money. You're going to get more activity whenever you do that. Unfortunately, that is not a long-term solution. In fact, is what Tom Cloud is saying is that in essence, these fresh injections of money that we have seen over the last several years have simply kicked the can down the road. And now we have to pay the bill. And we still don't have the growth that we were promised that we were going to have. Taking a look at this chart, Tom, this one's an oldie but goodie. This is a very powerful demonstration of the difference between the U.S. debt obligations and the national income.
Yeah, it kind of speaks for itself. I mean, you get a total American debt at $57 trillion, including the federal, state, and local governments' bonds, and the federal debt, the trust funds. Plus, we have businesses that have debt, household debt, credit card debts run away, domestic financial service. We're just seeing this thing continue to go out there, and it's almost growing in a parabolic rate. And it's just like what you said, as this new money comes in, it gets pumped in, but the real growth isn't coming. It's not even keeping up with the amount of money coming into circulation. So without it, we would be having a recession, or even worse, a depression or a deep recession like we've seen in Europe for the past 2 or 3 years. So we just have to realize $57 trillion, and remember, it's all like cyber money. It's all bookkeeping entries. And unless you have your money, which is the first mention of metals in here, unless you have it in metals, you really have nothing except a cyber entry into it. And we all know whether it's stocks or whether it's bonds or whether it's gold or silver, when you have a seller, you have to have a buyer. And there's nobody to buy $57 trillion of debt. So you know right away that not only does it come out of people's portfolios, but it comes out to a multiple thing, because once people start selling, they compound it, drive the bid down on whatever price of the product they're selling, whether it's a bond or a stock or anything, they drive it down. So one of the main reasons we want to hold precious metals as part of our portfolio is for that, because it's real, it's in your hand, it's withstood the time all the way since the beginning of the Bible back in Genesis. So that's the reason we want to have that in here and realize. And this one, Jerry, the gold debt ceiling relationship, that one's been a great one where the economist, the South Korean economist Yu, comes out and he shows that as the debt ceiling goes up, and the reason I leave this on there is I made a speech in August of 2011, right when the debt ceiling was being raised, and I left it there at 14.2 trillion, where they were fighting. And please listen, that is less than 4 years ago. Now we've already 19 trillion. We put another 4.8 trillion on in less than 4 years. And you just got to look at that relationship and know. But here's the other point: is now been broken, and we see the debt come up, but the price of gold is always kept direct relationship by the proof of economist Yu out of South Korea has been broken in 2012 and 13, where gold made its 28% drop. Of the last 14 years, gold had that one down year of 28.2%, and then in 2014, gold went down 1.5%. So we're right at 30% drop over a 2-year period. So this is another evidence that our key money managers and brokerage firms I look at are saying this is a major reason to be buying gold, because we know it always has come back up and followed the debt ceiling 93.7% of the time. So we got to look at that to see gold coming right back up, and it's got to get to 1,800 from 1,200 just to get back online where it was in August of 2011. This is unbelievable data that we've amassed here, and this is going to happen. The only thing is you just can't tell exactly, but I think we'll see a big change by the end of the year.
You know, back in 2009, our system told us that it was time to start moving into stocks, and we also were buying gold. So we were buying gold and we were buying stocks, and gold really began to break down around 2012, 2011, 2012. That was kind of the apex, or the zenith. And people really, and I want to get your take on this, Tom, because looking at this chart, you can see how gold was rising right along with that debt ceiling. It was rising right along with the growing debt. And then suddenly it seemed like gold investors and silver investors just simply gave up. They gave up, believing, I guess, perhaps the narrative that was coming out of Washington that things really were going to improve, that the money that was injected into the system by the Federal Reserve was actually going to somehow spur the economy back into a real state of growth, and that gold and silver now were no longer necessary to be holding, because here we are, we've come to save the day and we fixed it. But here we are in 2015, and we see that the problems are just as bad. The banks that were too big to fail back in 2008, 2009, that the American taxpayer had to bail out, now they're 30 to 40% larger than they were even during that time. So we have seen evidence that not only the same problems that we had in 2008 persist today, but they've actually become worse and worse. The debt problems have become worse. The too big to fail system has become worse. The politician gridlock has become worse. And yet gold and silver have pulled back as other types of financial assets have risen. So to you, what you're saying is you view this as an opportunity, not as a complete failure on the part of this overall relationship.
Well, no question, but there's a lot more to it than that, and we can't spend hours getting into what's going on in the banking system and the changes with the G20 and the bail-ins and what's going on in Greece right now with the tax to take money out of the bank. I mean, we could spend a webinar talking about banking issues and you losing control of your money or having a bail-in and losing a percentage. So it's not just it's an opportunity that it will adjust back to its 93.7% relationship historically to the debt ceiling being raised, but now there's a lot more at stake. You've got your bank deposits at stake because you no longer own them. But like I said, that's a story for another day. But the answer short term is yes, this is an incredible opportunity, and gold may rock around here for a few months. I can't tell you, but when it moves, and I think it will move this year, I've said it on your show before, it's going to go up at least 20% this year, both gold and silver probably more than that. And then the other thing, I just want to show this avalanche, and that's the way we are. We're standing down there on that cliff, and there is no question the Obamacare is kind of like secondhand news now, and yet it's still a major effect with the deficits it's running. The entitlement programs are running wild as more and more baby boomers are retiring and less money coming into the system. The debt and obligations are getting worse. And then just the debt itself. We've already gone through that over and over, and it's just coming down that thing, and we know it rolls down that hill to some point where it hits the bottom, and your portfolio hits the bottom if you're in the wrong thing, and that's really what this graphic picture is about.
The Baltic Dry Index, Tom, why don't you explain what that is, because it has made some news over the last several months as it's hit a 29-year low.
Well, it is, Jerry. It's goods and services being shipped out of countries, and of course primarily we think of China making goods and shipping them to the United States and other countries abroad. But I mean, the shipping index that has a lot to do with economic activity worldwide, the buying and selling of products, has hit an all-time low, and that was just in January. In fact, in March it's even lower. I haven't seen the April figures yet, but it's even gone to below an all-time low.
Yeah.
It set a new all-time low in March. So the goods just aren't getting. Of course, as we talk now, we get the deficit figures, the trade deficit back to $56 billion last month. I mean, we're back now seeing the kind of numbers we weren't seeing for a while. But this is very key, and let me tell you, this index is followed by every major company in the world, because this is one that is very accurate, the Baltic Dry Index.
Meanwhile, stock prices just continue to go higher. It doesn't matter which index you're looking at. The S&P 500 recently broke out to a new high, finally breaking past its 2008 peak. The Dow, the same thing. The NASDAQ just broke through a 15-year high, to a 15-year high. In fact, it finally got back to break even from the dot-com bubble. You see the same thing going on around the world, Tom. You see Japan, the Nikkei index has been going up. Europe's going up. China's going up. Stock prices around the world are just soaring. Here's the S&P 500 index since 1900.
Right, well, they are. Of course, when I did this graph a couple months ago, of course, now China's having major problems with their stock thing, and the United States is off a little bit. As I said earlier, the NASDAQ's probably up 3%. I'd have to look at it, but the Dow's up, same as gold, about 1.5%. So the soaring numbers, that we see, we know that's going to come to an end too, because the ratios are so out of whack. Now, I'll be the first to say, when you've got low interest rates at near zero interest rates, you can have the stocks go above historical valuations and go a little higher. I mean, I've been in the investment field 40-something years, and not just gold and silver. I've looked at all investments. I have to invest money from my own portfolio. So, but I do think this is maturing, this little bull market in a bear market. But we look back over the last, and we'll get a graph here, there, and we'll see that you'll see where they're soared up, and that one is the Dow.
That's the Dow
Jones. Here's the point, though. $10,000 invested in the year 2000 to the end of 2014 would have been worth $15,900. Go to the next one. And let's see. And then gold over the same period of time would be worth $43,700, and you would think gold's gone to hell in a handbasket, and stocks have been thing. But from the time we declared a bull market in gold in 2000 until the end of 2014, $10,000 in gold, $43,700. $10,000 in the Dow, $15,800. The Dow of the gold was nearly triple the return over that 14-year period. But nobody looks at that. And it's getting ready to happen again, let me tell you. I'm not talking about tomorrow or the next day, but I think the real thing will start in the fall.
We really kind of peaked out back in 2011, and it began to descend. 2013 was the year that really shook investors in precious metals. But since then, we've seen this grinding sideways. We have a lot of support. It's been an aggravating market in the fact that it's not really falling off of a cliff the way some people like to make it sound, but it is just grinding sideways in this very aggravating sideways market. And that's kind of where we are now. Here's some good numbers from 1999 to 2014 showing how gold has performed against the stock market indices. This is what you were referring to earlier.
I was referring to, if you take that 337%, that's 33,700 on 10,000. Add your 10,000 you started with, it'd be worth 43,700. Whereas silver, you add 21,900 to your 10, you'd have $31,000 over that length of time. So it would be 26% worse than gold. But when you get down looking at the stock indices, the Dow Jones average would be worth 10,000 plus $5,370, which is 64% less return than the gold. And the NASDAQ down there would be, you'd have 10,000 plus 1,000, so it would be worth $12,000, where that's 73.4% less than gold. So people telling you how bad it is. I mean, look at these returns. They're staggering what gold has done, even compared to silver over that time. And palladium and platinum, they've done much better than the stock indices, except for the Russell index that would be worth about 23,700, but still be nearly half of what gold is.
Those Russell.
So you got to look at things the way they are, not all this hype in the market. But this is your money. This is your money you've been entrusted with here on earth, and you've got to look at facts and not rhetoric out there in the marketplace.
There's lots of sales hype, lots of opinion out there being passed off as news. That Russell 2000, by the way, is the small cap index. Here is the gold versus numismatic coins. This is another hot button issue, Tom.
Yeah, this is what I talk about, Jerry. You and I have been talking about this for over 3 years, and people out there buying from telemarketers, buying St. Gaudens $20 gold piece that have done better than all the rare coins or any of the others. So this is like the very best. But if you were to put 10,000 into those, now this is very important. We get ready to say that's at my level. That's at my level. If you paid a 20 or 30 or 40 or 50% commission to one of these telemarketer firms, then that thing is slashed down as to how you stand. But if I bought gold back there and there, then it's over double the return, and that is the best rare coin. If you look down at the Morgan silver dollars, it's the best silver return over that time. It would just be worth $17,300 compared to $43,700 that you would have had buying the gold. So I still say to you, it's not too late. Get out of your rare coins and get into bullion, gold, and or silver that's going to go up or down based on the spot price and not on collector value or some value out there where you paid a 30 or 40% commission and will never get back even, or it'll take you 7 or 8 years.
Okay, Tom.
So once again, please get out those numismatic coins.
Let me ask you about these figures here. This right here, this number. What you're saying is that if somebody had bought that coin from you, that's what they would have returned it. But if they had bought it from, say, some telemarketer online and paid a higher fee, they wouldn't have the same figure. Right. Okay, I see.
Oh, they'd have way below that.
Okay.
That's what they would have from me.
So this is a high estimation. Got it. Okay.
That's a high estimation.
Okay, here is gold versus fiat currencies. This is an interesting chart as well.
This is a phenomenal phenomenal slide. It just blew me away when I was doing my research for my last speech. And you look at what the performance of gold versus monies created out of thin air around the world by governments to meet their obligations. The Swiss franc has been the best one, and it only gold beat it 72%. So using the analogy we've used all through this webinar is if you'd have just taken part of your money out, bought a ETF in Swiss francs as part of your portfolio, you'd have had 17,200. Well, that's a darn good return, better than any stock index except the Russell. Better than anything, you'd have had over that 14 years 72% profit just moving money out of one currency into another. And you come all the way down to the U.S. dollar, which is at zero, because that's what we were doing the gold as. It was the third worst performing currency of the major currencies over that 14-year period. Now, it's come up a little bit, and the euro's come down a little bit. They're about the same now, but we're getting ready to kick into the next round of fiat currency growth that's going to be absolutely phenomenal. And once again, if I'm doing this again 5 years from now, we're going to see phenomenal growth of gold against fiat currencies. It's going to be amazing. But once again, this is two lessons for you. One, get your money out of the U.S. dollar while it's up, and be looking at these other currencies. And we'll talk about that here as we move through these slides. And there's gold's annual change. You hear about how bad gold is. If you go and look outside of 2013, where gold was down in every single currency, and look in 2014, which paints the picture clearly to your head, we were down 1.5%, as I said earlier, in 2014. But because the dollar had a banner year against all these other currencies, gold was flying up in these other currencies. They were buying gold because they were going through what we went through from 2000 to the end of 2011. And gold went up a lot in 11, even though it started dropping off at the end of 11. So you can see that, look at all the green entries of gold going up in that particular currency in the red. So all the rhetoric about how bad gold is, and yet every country in the world, it's about a 90% success rate buying gold. It goes up in their currency every year. So these are facts and not fiction like you're led to believe out there in the marketplace.
Tom, before you address this slide here, I want to address the audience for a minute. I see some questions coming in. Once we get to a place where we're going to be talking about that topic, I'll bring those questions up. I already see a few about silver. We'll talk about silver here in just a moment. Also, I have to chime in real quickly. This is interesting. We just got a comment from a lady in our audience who says she cannot believe that she's getting information and hasn't been hit with a sales pitch yet. Welcome to FTM Daily, friends. This is so many of these videos you see out there online, and so much of the information that's out there is constantly bait and switch. They're trying to scare you, or they're trying to get you to do something. And with this information that we're putting out, we are here to educate you. We are really here to help you. Obviously, Tom Cloud sells gold and silver, but our main purpose with our website and the main purpose of why we exist is to educate people. And I thought that was a very interesting comment. It is so true, Tom. There is so much scare tactics out there in this world that we live in, especially in the financial world.
Well, it is, Jerry, and I've got a passion to help people. I mean, certainly I don't have to do this to make a living. I can retire if I wanted to tomorrow. That's not the issue. I don't believe I'm here to do that. I believe I'm here to help people get in at low commissions compared to 99% of the marketplace and bring information, because it helps other people be good stewards of their money, which I've always tried to be throughout my career. And if you educate people, certainly it makes them a lot more user-friendly, and that's what we've always tried to do. And this next graph is just, we can go through it real quick, is just showing that even though you're being led to believe no gold, gold's a terrible thing, look at the amount of gold, and all of a sudden the explosion has come where about 65% of the Gold Eagle sales since 1986 have just been in the last 7 years. So it's somebody's buying them, even though people, you'd think nobody's buying gold if you read the press or watched TV. And these are just pictures of some of the gold. The bottom right-hand corner is our new favorite product. That's a 1 ounce gold malt bar made by the Royal Canadian Mint, and it has its own serial number. It's 49 pure gold, .9999, the only bar in the world like that. It's pure 24 karat gold, and it's encapsulated in a hard plastic for protection, and right above it is the Canadian maple leaf. It's about 1% more than the bar, but there's the Gold Eagle on the top left and the Australian kangaroo. Those are the coins we sell the most of, and the bar, which is our #1 seller because the premium is less, and it's got its own serial number, and it's a COMEX approved product, which means it can be used to settle future trade.
Tom, for those people who are new to gold investing, these are the kind of bullion products that you're talking about as opposed to numismatics.
Yeah, these are all bullion products.
These are the kind you would want to have.
Yeah, when you hear the word bullion, some people think it means bars only, but bullion has to do with the content just being, it has pure gold in it, and it goes up or down based on the spot price. So coins are bullion also. There's bullion coins and bullion bars.
So there's no Elvis bullion coins, right?
No, not that I've got for sale.
All right, Swiss.
And here you just see the amazing total gold imports. From look at the amount, you can just see gold moving from the west to the east that we've talked about on other updates. The United States is getting rid of all of our gold. That all started during the Bill Clinton era, and is fast forwarded now where we don't know exactly what we have because they won't audit Fort Knox and let the citizens of the United States know how many tons of gold we really do have. But the point is, it's you see everybody else importing it, and we're exporting it.
Before we get into silver, we have one question about gold coins here and bars. A question from Elliot and Pam. How do you store gold coins and bars safely, Tom? What's the best way?
Well, you know, there is no magic way, Jerry. I'll just run through some of the ways people store them. Safe deposit boxes at the bank, home safe with insurance, which a lot of my clients have, hidden in a safe place at home. I had a client tell me recently he bought 3 cans of soup, took the top off, dumped the soup out, and he has his coins stacked in his pantry under a soup can. People buy waterproof things at Lowe's or Home Depot and bury them on their property. Others get private, like IDS, International Depository Services, up in New Haven, Delaware, which is the finest state-of-the-art private storage facility in the world. And a lot of our clients set up their accounts there, and when they buy from us, we ship the gold or silver to their accounts. But if they're, want to do that, I would recommend IDS, International Depository Services, in New Haven, Delaware, and they could just call or go on the website and find out more about it. But those are the most common ways, Jerry.
Here's a chart of silver from 2000 to the present. You can see that this also had a massive run with a pullback, obviously, during the 2008 crisis before it catapulted right back up. Same thing happened around 2011. It followed gold, began a downtrend. But it's got now into this, again, this little, what we would call a consolidation period, and it's moving kind of in a sideways pattern, grinding now. And volume has been fairly decent on this, on silver. We've been seeing quite a bit of a pickup in sales. In fact, Tom, I heard you recently say that some of the wholesalers that you've been talking to have been reporting some massive sales in silver as of late.
Well, I think, Jerry, that started, there's a lot of people in the investment business that they hate J.P. Morgan, but they keep an eye on what J.P. Morgan is doing. And when J.P. Morgan started buying physical silver, they had 5 million ounces. Now they have 55 million ounces, and basically the COMEX warehouse in London has had a major supply of its silver removed by J.P. Morgan and moved to private vaults. Well, this started some big sales. We priced some of the biggest sales in silver I've ever priced in 40 years of doing this. Only a couple of them have come through in 6 figures. We've quoted 2 in 7 figures that they're still shopping around. But yeah, people realize, Jerry, anytime something gets below mining cost, and I've only seen this 3 times in my 39 years of running this company, where silver is selling about $2.50 below mining cost. And the other 2 times, it took about 6 or 7 months before it popped back up as miners slowed production down. And right now, I feel that people entering the market, you know, are going to get a free 15 or 20% jump at some point. It may be 6 months, it may be 3 months, or it may be in the next 3 months, because that would run us out to 7 months since silver went in below the $19 level. So I am very bullish on silver. I think after Monday, when we know what the final thing is on Greece, there'll be some kind of announcement coming from the IMF, Greece, and the European Union about the debt that matures on Tuesday. It wouldn't surprise me if everything goes the way that most people expect. They'll kick the can down the road. They'll say they come to an agreement, and we could see a big move in silver next week. It's what some people are predicting. There's still a few people saying Greece may walk, and if they do, we would probably get a drop in silver next week. So I want to say both sides of that coin. But yeah, silver just looks outstanding right now. There's hardly any downside risk.
Yeah, I would have to agree with that at this point. We do have a question from Rob. You did touch on the mining costs for silver, and this is something that I think is important. You had mentioned this on a recent program as well on our podcast, that mining costs, you put it right around, what, $19 to $20, somewhere in there?
Yeah, I mean, all the mines are a little different, but the average is called somewhere like 19, 12, something like that.
Okay, because Rob is saying he's read, many different analyses, and some of them have said, $11 an ounce all the way up to 25, but that's probably based upon which mine you're talking about.
Oh, that would be, yeah, extremes. I would agree with Rob. Definitely you can find mines that are out there. I saw one recently that was like $12.80. They were still having some easy to get to silver, but certainly with a product or a commodity that's expected to be completely depleted from the Earth's crust in 4 years from right now, and what are we going to do with all these solar panels being built, all the electronics for computers? They're going to have to buy that silver from people like you and me that are holding it. But yeah, he's right. There's a wide range of cost. I'm talking about an average of about $19.
Let's touch on that a bit more, because I'm curious how common it is for the price of silver, the current price of silver, the spot price, to drop below the mining cost. How often has that happened throughout history in your experience?
Well, in my experience, 3 times in 39 years now. Certainly there's been probably times between 71 and 76 when I started the company that may have happened, but I'm talking about that I've testified and seen. It's been 3 times.
Got it. Okay, another question regarding silver. Looks like it's a hot topic here, Tom. Given the slowdown we're seeing in China manufacturing and the resulting increased silver inventories in China, will this not put downward pressure on silver's price?
It could. If economy is going to a slow worldwide and there's less demand from industrial users, which are about 52.6%, is the latest figure of silver that's sold every year, goes to people for industrial users. That is the way they've been kicking the can down and keeping all these economies alive. Certainly there's a possibility that could happen. We could have the first time silver stayed below mining cost for over 7 months. I don't look for that to happen, but yes, it's definitely a possibility. And a lot of that, as I said earlier, has to do with solar panels. That has been the major industrial purchasers volume-wise has been for that purpose here in the last 7 or 8 months.
Tom, we got a follow-up question from Diane. If Greece walks, why would silver fall?
Because we'll be the world will be almost in a recession. They'll have debt default. There'll be people not getting their bond payments. You'll have a slowdown. Everybody will move the U.S. dollar because it's still a short-term parking place, and you would see the dollar go up, which would also make
put pressure on
silver and gold go down in dollars, like we've shown throughout this webinar. And then you would have Italy, Spain, and Portugal that are also in trouble in the EU coming in, having to make a decision. If Greece walked, there's 3 other countries that would probably walk, and then we'd probably be talking about a world depression, not a recession, including the United States would be drugged down. So that's the reason we think it would, and most economists think it would be very detrimental to the world economy. Stock market in the U.S. would also take a huge hit.
Deb is asking, what's the difference between the LBMA and the COMEX, Tom?
Well, one's a London bullion market, and it does the setting of the spot prices among 6 members now, and that's getting weeded out. That's the LB, and the COMEX is for future delivery. One names the spot price and does have an exchange, and then the other is future contracts for future delivery. When you put up $1,000 to control $5,000 worth of silver and the contract expires, of course you can have an option or a future contract. So that's what it is.
You have some reasons to own gold here on the screen. Now let's just go through these real quickly. First of all, gold is returning to its true historic role as money. I think most people by now know that gold used to be money. I still got to tell you, Tom, when I go out and do seminars and conferences and speak out, I continue to see that most people have never actually really held gold or silver in the palm of their hands. And many of them don't even realize that it really is viewed by much of world history as money itself.
Well, yeah, I mean, all the way up until 1971, you could turn in paper money and get gold. That's when Nixon closed the gold window. And we use, and we are living in the longest period of time with a fiat currency that's ever survived, and it's 44 years. And people believe the U.S. dollar will be the first currency in the history of the world that will make it without going back to a gold standard or defaulting. I think they're mistaken. But they can read through these items here, Jerry, that came up with all these different reasons to own gold. And I add to this every time I see a new one. I've been building this since 2011.
I have a few more on this next slide here. Central banks nearing an inflection point where they'll no longer be in a position to supply the gold necessary to keep the market in equilibrium. We certainly see that. We see the skepticism about U.S. gold reserves really is, it seems like it should be a much, much bigger issue than it is. Of course, there's many things that probably that fit that scenario. Now, we're talking back about gold now. These are reasons to buy gold. These certainly don't apply all to silver as well. There are some different reasons to buy silver. Yeah.
Now, gold is money. Silver is an industrial/investment metal. Gold has historically been money, and yes, it can be used for jewelry. It's got a big jewelry demand, but we see the central banks buying up gold this year like crazy, and you just got to realize while we're sitting here, central banks are buying gold, and at some point this year, China will announce their gold reserves, and many people believe it will be in connection with a new gold currency. And I don't have any inside information on that at this point, but certainly it wouldn't surprise me if they came out with a gold-backed currency later this year or first half of next year.
That'll certainly be the shot across the bow for the U.S. dollar. Let's talk real quickly about this one other point, the relatively small size of the gold market. Some people don't know how small it really is. It's tiny.
Well, it is tiny. I mean, I can't remember the exact, but all the gold ever mined would fill up an Olympic swimming pool, and people look at that and say that's just hard to believe, but it is the truth. And certainly there's a finite amount of gold. Gold does have more years of estimated reserves than silver has, which is only 4 years away, which is hard to believe. I can remember seeing my first geological report back in 1980, 4 years after I'd started this company, and they were talking about 35, 40 years of reserves, and I was saying at that time, wow, I may be in this business long enough to see silver depleted, and here we are 39 years later, and talking about less than 4 years of mining left at current consumption. And then I just go back and show the Bible verses to show that everything, all money from the book of Genesis, where gold was in the Garden of Eden and used in trade, up through Ezra, where they rebuilt the temple and built it with gold and silver and priestly garments, was the payment that they used. And First Chronicles goes right in and talks about the derricks, and actual derricks are a gold coin that are 3,500 years old that we still see some of. I get them occasionally that collectors and investors like to buy. Been one of our best investments when we've had them. I used to sell them for $1,000. Now they're $3,000 in 10 years. So it's just wise for someone to, look at different advisors. FTM is a tremendous outlet of information and education. I try to be the same way. Yes, I sell gold and silver, but I compete with anybody. I'll fully talk about, what you're paying. We charge no shipping insurance. We charge you no back-end fee. I don't know of another company in the country that does that. But what you've got to do is, look at abundance of wisdom, then using different counselors and looking and then spreading your wealth out among several different areas, just like we're commanded to in Ecclesiastes 11:2 to divide our wealth 7 or 8 ways. So all that's very important to me, and I think it probably is to most of our listeners.
I want to talk real quickly about before we get into this asset allocation that's up on the screen. I want to go back and hit what you just said about silver, because I think that's very, very important, because most people don't know that these geological surveys are put out, these geological reports are put out on an annual basis, or how often they are put out, and they detail how much of this precious metal is available within the Earth's crust to be mined. And what you just said a while ago is very important to stress. You said that based on the latest geological survey, there are only 4 years left of mineable silver. Is that what you said?
That's what I said. That's exactly right.
And with
right. That's the reason I keep buying silver. I don't even care if it goes down another $1 before it skyrockets. It doesn't. It's unimportant, because the ones of you listening that were clients of ours back in 2008, you would know that the delay in getting. I mean, we could take orders and sell it to you, but we'd leave you money in escrow. We wouldn't give it to anybody, but sometimes it was taking 3 and 4 months to deliver it, and I was one of the fastest deliverers in the business back in 2008. And I'm just saying, whatever percentage of money you're going to allocate to silver and gold, I would get into, before the fall, because there's a lot of things we believe will happen in the fall. And then this asset allocation thing, Jerry, just I put this up because I do believe I can work with being a counselor, but I actually put up where I have my own money, and I put question marks because that's a person's own decision. And let me tell you, when I did this, and if you look from the last weekend in February when I gave this talk that had some of these slides in it, I just bought KOL, the coal ETF, and USO, the oil ETF. Those things in 2 months are now up like 15, 18%. I bought 2 foreign currencies ETFs, the Swiss franc FXF and FXSG, the Singapore dollar, and I got some physical Israeli shekel, but you have to find a way to get those. I can't help you with those or the ETFs. But what I'm saying here is you've got to look at where you want to have your money. I mean, my real estate REITs have been paying me 7.5% this year, and the value has stayed the same. So if I can keep the stock value at the same and make on part of my portfolio 7.5%, that's a heck of a return. And this REIT that I use, Real Estate Investment Trust, is over $3 billion and run by some of the most important people ever to be in the real estate business in America, a lot of the old Trammell Crow people out of Dallas. So you just look around and get counselors, and you can build you a portfolio that is bulletproof, and if something's going down, something else is going up. And we just got to use common sense and biblical sense in investing. While it's tough to make decisions, this makes it easier when you're doing asset allocation this way.
Here at FTM Daily, we provide you guidance on precious metals. We do provide charts weekly on those. Foreign currencies, we have a foreign currency service we put out every single month that tells you the current trends on about 9 different currencies that we like personally. Stocks, of course, we do some trading. Bonds we don't talk too much about. REITs we do talk about a little bit. We love real estate, physical real estate. And along with Tom, we have been investing in USO and haven't actually got any exposure to coal yet. It's kind of a bobbing up and down, but you're right, it has had a nice run since you picked it up. So, this is a really good overall asset allocation, showing you that there's so many different places to put your money. Let's talk about 7 possible financial crisis triggers. These
well, the Israel-Iran conflict's one you can look at. We know biblically that's going to continue till the end. That's not anything that's going to stop. It's just, will it get into nuclear warfare is the question. The Greece financial situation is coming up. We'll know next week what they do there. We're already seeing bail-ins in 7 different countries where banks have taken part of depositors' money, and anybody that doesn't think it's come to the U.S. has got to be daydreaming. It may not be this year, it may not be next year, but it won't be far. And when it does, that'll be one of the biggest triggers to ever happen that'll move money into gold. The bond market top is incredible. When I was reading by Bill Gross, the biggest bond trader in the history of the world, who's at PIMCO, put out this week, as we're talking, that the 3.5-decade bull market in bonds, he thinks, is topping. Ever since Reagan came in and we had interest rates up at 17% on bonds, we now see them down near 0, and we know the first time interest rates pop, just like we saw in Germany last week when they raised them 1/3 of 1%, you're going to see a top, and people are going to start rotating out of bonds, and gold will get part of that money. Stocks will get some of it. Money markets and get some of it. But we're right at the bond market top. It just takes a move in interest rates up, and it would cause the bond market to start liquidating. Bond defaults are going to be numerous. I don't think that'll happen until the bond market tops. But there, like we showed back there, there's trillions of dollars with no income to pay back the money they borrowed. There's no FDIC insurance to cover it. There's no nothing. So that's going to happen. And then Russia and China and India could sell off the dollar. At the time I did this talk, for 5 straight months, Russia, India, China, and Japan had all been net sellers of U.S. Treasuries for the first time in 46 years. So I haven't looked at the charts the last 2 months to see if they've sold more than they bought. And if they have, this trend is picking up steam. So if all of them start selling off the dollar, it's going to send the dollar down lower. And then the other thing we've already mentioned is Russia and China have been working on a gold-backed currency. I've even sent some of you pictures of the billboards circulating in large cities in China showing what the new renminbi gold coin will look like. They don't give you any time frame, but they're already telling their citizens they've got a gold-backed currency coming. and you can see the billboard. And if you're listening, drop me an email to my email or to Jerry, and we'll send you a picture of the billboards going around with the gold currency. And if that came, there would be billions of dollars that would leave the U.S. dollar and other currencies and move toward the new renminbi, which they're calling it the actual currency, the yuan. And then lastly, number 8, and number 8 had not happened at the time, and that is on October 20th, the world has finally realized that China's here to stay for the rest of our lifetimes. They're going to change the way the dollar is valued in the world market and come out with a new basket where right now the euro makes up 58.6% of a weighted basket. So when the yuan comes in around or on April the 20th, it's going to send shockwaves because immediately the yuan will be higher than the dollar, and you'll see the dollar index push down, and it's going to be many ways, and we'll have shows on that event, you know, as we go along and talk about it. So you'll hear from us again, but just be aware, as you know, the U.S. dollar will not be the same after the end of October of this year.
Yeah, the IMF now looking to add the yuan to the, I guess there's 4 official reserve currencies today. There is the British pound, there's the euro, there's the U.S. dollar, and there's the Japanese yen. Now talking about making the Chinese yuan a 5th official reserve currency, allowing countries around the world to actually hold the yuan, which a lot of people need the yuan because they buy stuff from China, and allowing them to hold it, but not just hold it, to hold it and then count it towards their official reserves, which is a huge, huge thing. If the IMF approves that, that's going to be enormous. Of course, the U.S. could play politics and push it down the road and kick it down the road a little bit just to hack off China, but that would really cause some repercussions, I'm sure. Very good analysis here. We are getting a couple of questions regarding this. Elliot and Pam saying, is now then the time to get out of the bond market? Tom, you're not a financial advisor, neither am I.
No,
what are your thoughts?
I'd say it's time to start looking. I mean, you may want to wait until the first jump in there because it is safe right now based on the rest of the world. So just be, careful. And, and when you talk about bonds, there's all different kinds, and we don't have time to get into general obligation bonds and non-general obligation bonds and income bonds. So we'll just leave it like that, but just be aware of it. I don't think they need to get out today.
Another question from Cynthia, will the new Apple iWatch impact the gold supply? Remember we talked about that a little bit on the show.
Yeah, I mean, some people have estimated as much as 500 tons a year, but of course the iWatch's sales have come out slow because they depend on the silver and the gold that are going into it. But absolutely the iWatch is just another consumer that's is like a jewelry consumer that's taking gold off the market and using it for adornment. So, yeah, absolutely, it's a very positive thing for us that own gold that we're going to have Apple in there buying, and some people believe they're going to hide a lot of their reserves in gold. I've read this in some conversations and I've been on in Europe that they're going to take part of their reserves and actually buy gold and hold it as an investment, and then if they need it to make the watches, they'll use it.
One final question, Tom. A person here is asking, should I dollar cost average into precious metals, and what percentage do you suggest?
Well, as I put up there on the screen, to me, I deal with money managers all over the world that buy physical metals from me, and I put up 10 to 35%, and some people have more than that. I don't feel comfortable telling anybody to put more than a third of their assets into gold and silver, even though I think you'll turn out a lot better. I still wouldn't tell you to do that, but in metals, I think you need to have a core position of 10 to 15% of the value of your investments. I'm not talking about your house, but the money you have in IRA, 401k,
investable assets,
investment, you add that up, and I'm talking about 15% of that. I'm not talking about equity in your house or your car.
Yeah, makes sense. We see this chart of the dollar. There's been a lot of talk about the dollar. That we saw that happen at the beginning of July 2014 we saw this breakout in the dollar, and we began to go long the dollar and short the euro. Really enjoyed that ride. But just to give you some perspective here, as you've heard the mainstream media blathering about how strong the dollar is, you can see how really weak it really is. This has been a nice pop. It has been an unusual pop, and the strength of the dollar here has been interesting. But you can see overall that there's not much to it here. I mean, it really is still locked in this very strict downtrend.
Yeah, if you look at the top line, and one of the points I made, when you see the dip going to the middle of the grave, which is the recession, of course, when the recession came, then because of the financial debacle, then the dollar, people moved to safety. They got out of stocks because the stock market dropped 40%. So that dollar was pushed up right in 2008 and 9 because of that. But immediately in 2010, because of the liquidity that was flooded, it resumed its sharp drop until the economic crisis started in other countries.
That's important for investors to know, is that during times of pullbacks, during times of big recessions, economic turmoil, you will see the U.S. dollar strengthen, and that's not a surprising thing. And don't think that all of a sudden everything is broken down because of that. Again, as Tom had mentioned, this is a flocking to safety, and the U.S. dollar still is perceived as the safest currency on the planet. And we don't think that's going to last forever, but it still currently is. Here's another very important chart, Tom. In fact, Japan just overtook China in its holdings.
Japan just overtook China, and we've also, like I said, it just shows there that they were selling at the end there, and that's when I referred to a little earlier, saying I haven't seen the last 2 months to see if they're still a net seller. But the two of them hold. You got to remember that the two of them hold $2.5 trillion of U.S. Treasuries between Japan and that. And then you're looking over here at which countries own the most U.S. debt, and China and Japan own 41% of the debt. And you can see the other countries there that own the debt beside China. So once the yuan is the king currency, I don't have to tell you what's going to happen. Once again, Russia has started selling U.S. Treasuries. Net seller every month.
Biggest month-on-month drop ever, just here at the very beginning of 2015. That was kind of a shocker whenever we saw that. Of course, it wasn't too much of a shocker given all the fact that's been going on between all the tensions between the West and Russia. Here's some U.S. dollar alternatives, Tom. Talk about these for a minute.
Well, the Polish zloty and the Israeli shekel are two currencies I am very bullish on, but the problem is you have to buy them.
Yeah, there's no ETF. There's no ETF.
No ETF. You either gotta have somebody go into one of those countries and bring them back, or we just had a client in Israel that Federal Express about $7,500 worth of shekels back to them. But I think the Israeli shekel and Polish zloty are going to do fantastic. I do own the Singapore dollar through an ETF, FXSG. I do own the Swiss franc. And physical cash, I think everybody should have some. You should have some 20s and 50s and 100s. I'm talking about U.S. dollars here, just enough an emergency if there's a bank closing for a few days. So just get you some small denominated currency, even if it's $1,000, $2,000. You need to have a little bit of physical cash.
You sure do. Reserve. You sure do. You need to have some physical cash on hand. I strongly believe that. These two ETFs, by the way, are just 2 of the 9 that we track in our global currency monitor every month here at FTM Daily. And these 2 right here are accessible through the market. So you can go out and buy these ETFs through a brokerage account and then get access to them. And that's probably the cheapest way you can get access to foreign currencies. The other way, for example, the Polish zloty or the Israeli shekel, you can probably, I never have tried to buy the Polish currency, but I have the Israeli shekel, because typically you can go to your bank. Bank of America, for example, knows that people travel, and so you can typically go in there and buy it much cheaper than you can, say through a currency exchange market or something like that. So you might try your local bank if you're looking to get access to some of these currencies that do not have an ETF. Financialization, Tom.
Well, just in cheap credit those to access. Of course, I can't read. I got the box frozen there, but read that black to me.
Yeah,
Jerry,
it says then when the credit expansion reaches levels that cannot be supported, the lenders demand collateral and or favorable trade and financial concessions.
Yeah, that's what you're going to be looking at. This new word financialization that's in the marketplace. You're going to see more and more of that because they just can't support the expansion level. And what's going to happen, it's just the government's going to have to inflate things and print a lot more money or the financial system's going to crack. So just be aware of that new word that you're going to see that really just started being used in the last 6 months.
We have some scriptures here on the biblical wisdom of finance. Tom, can you see these?
Yeah, just the same thing I said earlier. Just got to be faithful with your use of worldly gifts that are given to you, and it is required of us to be faithful and to be good stewards. And that's all we try to do is use biblical wisdom. It is available to us through God's Word, and that's just a couple of my verses that I like to use and talk from time to time. But bottom line is we're trusting everything to God. And lastly here, can you buy precious metals in IRA? These are the two that we use as custodians, EquityInstitutional.com and GoldStarTrustCompany.com. And you can download their applications. You want to get the application and the rollover form. If you're interested in having physical gold and silver in your IRA, we'll help you set it up and be your broker. There's a section on the application that asks you who your representative is, and we can supply the information that you would need, because you'd want us to be that and not them, because they're going to charge about 1% more. So that's what I would recommend. If any of you call us, and we'll be happy to talk to you. Jerry, why don't you read that last one once again, as part of mine's cut off.
Oh, yeah. Well, basically, these are scriptures, I believe, that you've placed in here about the unjust weights and balances. You want to talk about that for a moment?
Oh, yeah, thank you.
Mm-hmm.
Yeah, that's been my pet peeve. I'm so sick, just like John Williams is at shadowstats.com, the guy that kept up with all of our government statistics and left the government because they were all wrong, all made up, and there's no question where the United States is headed biblically. I mean, everything we do is this honest measurement of weight and measures. I mean, it's just every document that comes out, every deficit that comes out, everything, every employment figure is changed to make it look better than it is. And, you know, we're going to pay the price for it. And some people, it doesn't bother, but it's always bothered me, and lately it's just gotten to where it's a joke. There's not one figure that comes out that's accurate. If you don't believe me, just take shadowstats.com. It's the best publication to take. Comes to you by email, and you can see what the real unemployment numbers are. I mean, unemployment now, the way it used to be, figures at 18%, not 5.5%. And I'm doing just the way they kept it 10 years ago. So you've got to look at weights and measures is the way you are, and the only place I know you can get that is Shadow Stats. And any of you can see the information you need to contact me. There's my 800 number or my email address, and if you want a copy of the billboard out of China, you can email me at that address, and I'll send it right over to you. If you want to talk about the IRA or rare coins, you can give me a call there, or if you want to talk about precious metals, we can talk in what kind of gold or what kind of silver would be the best for you. You may want to visit my website, cloudhardassets.com, and under precious metals, there's two words, the word silver and the word gold. If you'll read those two before you call, I think it'll really help you know, because I put a pro and con about every kind of gold and silver, why we think it, what the good is about it, and what the negative is about that particular kind of gold or silver. So if you'll visit cloudhardassets.com and hit the precious metals button, just read the word gold and the word silver, and then when you call, we'll make it a lot easier to understand what we're talking about.
I want to thank you, Tom, for being here today. We do have a few more questions we want to wrap up with. Before we do, I want to let everybody know that if you do want to get, we do have a gift for you. If you want to download the FTM Daily Gold Investors Kit, you can do that right there at ftmdaily.com/gold. And then right there you get Tom's weekly audio alerts. For those of you perhaps who are new to our website, maybe you don't know that we do this every single week. We don't do this webinar every week, but what we do is a similar weekly update where Tom will provide an excellent update for precious metals investors. That's on our podcast every single week. We take that portion of the audio and place it on ftmdaily.com/gold. So for those of you who are specifically interested in this information, you can just bookmark that site, go there every single week and get the brand new latest audio alert. There you can also sign up for Tom's email alerts. And we also provide the latest precious metals news that you can find there. But we also, on that same page, you can download the official FTM Daily Gold Investors Kit written together by myself and Tom Cloud. Provides you with 5 rookie gold investing mistakes to avoid, and also showing you how to save thousands of dollars in commissions. Tom, I don't know how many people I have heard over the years, because you've been a sponsor of ours now for many years, and I have heard so many times how many people you have saved money for over the years. It's just really been something, because most people, when they go to buy gold, they don't know. They don't know exactly what to do, and so they'll typically fall for one of these really big outfits that have a big name, and they call in, and then they're talking to some 20-something on the phone who doesn't really know anything about the history of money. They certainly don't have your experience, and they're being told to push a particular numismatic coin because they're going to get a bigger commission for it. And so they end up selling this, and of course the individual who calls, they don't know anything about gold either, so they don't know they're getting fleeced. And in the end, you have people who are heartbroken, who have put a lot of money into these numismatic coins, and it turns around that they don't have their money. They end up losing money out of the deal. And so I've heard numerous times how you have help people with that. Maybe you can speak to that just for a moment, and then we'll have a couple of questions finally.
Yeah, I mean, we want to be sure people get bullion, what's going to go up or down based on the metal price of the gold or silver or palladium, whichever they're interested in. We just don't want people to get over in rare coins, a collectible market. But really the reason they're selling it to you is because they can hide the big markup. It's not like quoting a 1-ounce gold bar from the Royal Canadian Mint, because that way you could ask 3 or 4 people and get 3 or 4 different prices. And the rare coins, they say, oh, but this is a 1906 and it's worth a little more. So they have it where there's no way, they'll tell you what kind of markup they had. But I won't go through the nightmares of that. But we'll answer those last questions, Jerry, if you want me to answer them.
Yeah, we got a few here. Let's see. Let's just wrap this up here. We have one question from Gordon asking, do you believe that bars or coins are more beneficial for a investor?
I like bars, but that's a personal thing of having done this. I understand coins are beautiful, and Americans love coins, but when you can buy the gold bars 1.25% cheaper than the maple leaves and about 2.25% cheaper than the gold eagles, and it's a COMEX approved product. In other words, if there ever is a default on the COMEX and people start taking delivery, because you've heard me say in the podcast before that there's 80 people that think they own gold for every one person that really owns the physical gold. The rest of it's what we call paper gold. So they definitely, not only would you make money on gold going up, but if they had to come in and buy COMEX bars in the market, the premium would probably go way up too. So I like the bars because they're cheaper, they're 4.9 pure, they've got their own serial number, and they can be used in COMEX trading. So that's what I like the best, but certainly we sell a lot of coins. People like like coins for personal reasons.
Final question: is the Israeli shekel a good bet? This is going back to the currencies we were talking about, Tom. Why is the shekel a good bet when Israel is in danger of attack?
Well, danger of attack. They have been long. I started going there in 1995, and they've been the same thing. I even had one of those missiles shot from a neighboring country that hit about 2 miles from where we were. So I've seen it, but it's going to continue on. But the main reason, Jerry, is people are now finding out there, and there's been talking for 15, 20 years about the oil capacity there and what would cause the invasion of Armageddon, Gog and Magog, and you start studying the scriptures, and you realize there's something there of great value that they would be coming for. And certainly a country that small, that high tech, with the gross domestic product they have per person, the shekel is going to be very, very strong. And if they ever start having the oil reserves, it's going to even get stronger. So it'd be a great place to have a mild diversification, but at this point in history, you can't buy it on an ETF simply. You've got to figure out a way to get the physical shekels.
Well, in our remaining moments, friends, I just want to remind you that if you'd like to talk to Tom Cloud directly, you can talk to him and get his wealth of information, wealth of experience, and ask him questions. He is an advisor, not just a dealer. So if you have questions you'd like to ask him, you can call him 800-247-2812. You can also reach out to him by email, tgcloud@bellsouth.net. You can also find his website online at cloudhardassets.com. And I do want to encourage you to go and sign up for that free Gold Investors Kit. Lots of great information in there. And sign up for the free email alerts and the free precious metals alerts and the free weekly audio alerts. Lots of good information. If this is something that you're new to or you're thinking about getting involved in gold, silver, palladium, platinum, this is an area that will really help you, this page on our website. And so just check it every week or sign up for the email list there, and you'll get automatic updates in your inbox every single Wednesday. All right, Tom, I want to thank you for joining us today. We had a really great time. I want to thank all of our folks for being here. Any final comments, Tom, before we bring it to a close?
No, I just want to thank everybody for taking time out of their busy day to listen. You've got a commitment from me and Dan and Kathleen, our traders here, that we're going to give you every bit of information we can and help you through this maze, because the maze of financial chaos is going to do nothing but increase from here forward. And so just stay tuned, and we'll keep trying to bring timely information to all your listeners. And it's always a pleasure, Jerry, to be on with you.
Thank you, Tom. I do appreciate you being here today. God bless everybody. Thanks for tuning in, and I know this is a commitment of your time. I hope that you received a good value for your time and a good exchange for your time. And again, don't forget to find us online, ftmdaily.com/gold. Sign up for that free information. Get that information right in your inbox each and every week. That way you don't have to go looking for it every single week. God bless everybody. Have a wonderful rest of your week, and we'll see you next time. Bye-bye.